You check your portfolio. Green candles, profits. Feels like you're in control, right? You bought the dip, now you're riding the wave, believing you're steering your own financial destiny, but is that control real? Or are you just a small fish in a tank run by unseen giants? While you analyze charts, whales, massive holders, move markets with a single transaction. They can send prices soaring or crashing in seconds, shaping the very freedom you think you have. Your independent decisions. Often just reactions to their moves. This isn't a conspiracy. It's the reality of a young, unregulated market. The biggest players write the rules, not by hacking, but by leveraging their size. They create hype, trigger panic, and your gains or losses are just ripples in their wake. So next time you celebrate a win, ask, did you outsmart the market, or just follow a whale? Understanding this dynamic is the first step to real empowerment in crypto. Only by recognizing the whale's power can you start to navigate these waters safely. So who are these whales? Simply put, they're anyone holding enough crypto to move the market. Think 1000 plus BTC or massive sums of other coins. They're not just early adopters or techies, they're also hedge funds, investment firms, and even exchanges like Binance or Coinbase. Some are companies like MicroStrategy or even governments holding seized assets. Their decisions can send shockwaves through the market. Crypto's thin liquidity means a single large order can swing prices by double digits in minutes. Unlike stocks, it doesn't take billions to move the needle. This volatility, combined with hype-driven retail traders, gives whales enormous influence. In crypto, the giants really do rule the sea. Whales don't just rely on size, they use tactics to manipulate prices and exploit smaller investors. They create FOMO by pumping prices, then dump their holdings, leaving others with losses. Spoofing is common, placing huge fake orders to trick traders, then canceling them to profit from the confusion. Wash trading, buying and selling to themselves fakes demand and lures in unsuspecting buyers. Advanced trading bots let whales act faster than any human, analyzing data and front-running trades. For retail investors, it's like racing a supercar on foot. The game is stacked and most don't even realize it. The May 2021 crypto crash shows whale power in action. Bitcoin hit all-time highs, retail investors piled in, and euphoria reigned. Then, Elon Musk tweeted, Tesla would stop accepting Bitcoin. Panic hit, but the real damage came from whales moving huge amounts to exchanges, preparing to sell. Selling pressure triggered a cascade, leverage positions liquidated, prices plunged. In one day, Bitcoin dropped over 30%, wiping out over $1 trillion from the market. Whales who sold at the top made massive profits. Retail investors who bought the hype suffered devastating losses. It was a brutal lesson. A few big players can overwhelm millions of small ones. In crypto, power is concentrated, and the consequences are real. Swimming with whales is risky, but you're not powerless. Become a whale watcher. Use blockchain tools to track big moves and spot warning signs. Large transfers to exchanges can signal selling. Big withdrawals may mean accumulation. Don't chase hype or FOMO. Whales profit from emotional reactions. Focus on long-term projects with real fundamentals, not quick pumps. Learn market psychology, liquidity, and how order books work. Knowledge is your best defense. Crypto is a wild frontier, but by understanding whale behavior, you can navigate smarter. Don't be prey. Be a savvy navigator in the digital ocean.